1970, the average wage was about $9,500. But a family of four could live with one wage earner.
Right.
Now, I'm not saying they were super wealthy, but they could get by.
Yeah.
Today, I think the average wage is somewhere around, 54, 58 grand.
Sure.
And on the outside, you'd go, well, I'd much rather have 58,000 than 9,500, except that it takes two wage earners and you're paycheck to paycheck at 100 grand.
Right.
And everybody that made up to 150,000 got stimulus checks. What does that tell you? What do you think, they want to be nice?
Right.
It's because the currency is worth that much less.
Mm-hmm.
And that's also what's enabled that income and wealth inequality is the system. Dollars, right? It's only used in one place, the financial system. You can't eat dollars, and it's only used in one place because it's an intangible. And they take that and they revalue it against physical gold that is all intrinsic value. It is because it has the greatest utility of any asset, period, gold and silver both. The greatest utility, and both of them are used in every single area of the global economy. Right? That's why they've never gone to zero, because they have the broadest base of buyer and they revalue that overnight. So like in Venezuela, who's now done 3 overnight revaluations, we'll see if they're going to do another one. The average is 3. They did when spot gold, because they suppressed it. So when they did that overnight revaluation, spot gold went up like something like 3,500%.
Interesting.
It's very interesting.
Huh.
Probably why I've been doing it for all these years.
Yeah.
And we are living in the single most interesting time that we could ever be living, because this is a social, economic, and financial reset. And that's like way more than what happened in 71. We're in January. How long have they been postulating about raising interest rates? And they're not going to do it until March.
Right.
So they're way behind the 8 ball as far as inflation is concerned. So yes, just like you, I pay attention to those headlines constantly, because what also happens with them is they do reveal the patterns. For the normal person that, they when you read the papers written by the bankers, by the IMF, by the BIS, by the Fed, by all these guys, right? You'll see that they actually admit to making things really complicated, because if they do that, then people don't question them, right? Oh, well, I don't understand finances. So, gosh, they must be so much smarter than me. But when I read them, number one, I know that what they're doing is they're giving a signal to those that have been deemed too big to fail to shift how they're positioned. But it is always the little guy, the institutional investors that are investing your money that have been picking up the slack, so that you don't notice in the bond market how broken it is and how fragile it is, so that when it does implode, well, hey, those big guys have already gotten out. They're already putting their money in hard assets, gold, rare antiques, real estate, etc. And then the little guy is left holding the bag.